Imagine walking through a crowded bazaar in Tehran. You stop at a stall to buy a loaf of flatbread. The price tag reads 100,000 rials. By the time you've picked up a few more items and returned to pay, the vendor apologetically quotes 120,000 rials. Prices seem to climb by the hour. Your monthly salary. It buys barely half the groceries it did last year. How did it come to this? How can a country with some of the world's largest oil reserves find its people struggling to afford bread? Today we dig into the mystery behind the miserable economy of Iran. Iran wasn't always synonymous with economic despair. In the mid-20th century, Iran's oil wealth fueled rapid development. By the 1970s, Iran's GDP per capita was soaring. Tehran's skyline was rising, and a middle class was emerging. Yet fast forward to today, and Iran's economy still hasn't regained the level of prosperity it enjoyed in the 1970s in real income per person. In other words, an average Iranian is, in inflation-adjusted terms, poorer now than their grandparents were under the Shah. This startling reversal underscores decades of turmoil and policy failures. A brief history. The 1979 Islamic Revolution overthrew the monarchy and promised social justice and self-sufficiency. But the new regime's policies, combined with an 8-year war with Iraq in the 1980s, devastated infrastructure and finances. Oil has remained the lifeblood of Iran's economy, historically accounting for as much as 60% of government revenue and 80% of exports. This heavy dependence on oil meant that Iran rode a roller coaster of boom and bust. When oil prices were high, money gushed into government coffers. When prices fell or exports were curbed, everything stalled. Meanwhile, Iran's population ballooned from about 37 million in 1979 to more than 90 million today, adding pressure to create jobs and growth. Successive governments tinkered with socialism, then privatization, then back again, often without consistent direction. Crucially, Iran has been hamstrung by international isolation. Following the 1979 U.S. Embassy hostage crisis, the United States imposed sanctions that never fully went away. Relations briefly thawed with the 2015 nuclear deal, when sanctions were eased, but collapsed again in 2018 when the U.S. withdrew and slammed Iran with a maximum pressure sanctions campaign. The result has been a near-constant state of economic siege, internal policy whiplash, and unrealized potential. In short, Iran's modern economic history is a story of wealth squandered and opportunities missed, setting the stage for the misery we see now. Now let's break down the key reasons why Iran's economy is in such dire straits. Multiple factors intertwine, from foreign sanctions to internal mismanagement, creating a perfect storm of economic pain. We'll examine each driver in turn. One of the most immediate and chronic choke points on Iran's economy is the heavy weight of international sanctions. These restrictions, primarily led by the US, with varying support from Europe and the UN, have effectively cut Iran off from normal global trade and finance. Iranian banks are barred from international payment systems. Foreign investors flee at the mention of US sanctions penalties. Vital export industries like oil are capped or forced into black market channels. The result? Iran struggles to sell its chief product, oil, and to earn hard currency. For instance, after the US exited the nuclear deal in 2018, Iran's oil exports plummeted, dropping from about 1.4 million barrels per day in 2018 to just around 500,000 barrels a day by 2019. Oil revenue crashed from around $65 billion in 2018 to just $16 billion in 2020. That's a massive collapse in earnings in the span of 2 years. The government suddenly lacked dollars to pay for imports or stabilize its currency. Businesses that relied on imported materials had to shut down or source goods at exorbitant black market rates. Everyday Iranians felt this acutely. The prices of cars, appliances, and even medicines many of which are imported, skyrocketed. You might be wondering, why can't Iran find other partners or workarounds? In some ways, it has tried. Tehran sells discounted oil illicitly to friendly countries. China is a major buyer of Iran's sanctioned oil, and it has developed a network of front companies to skirt restrictions. But these workarounds only go so far. Global trade is largely conducted in US dollars via Western banking networks. The threat of US punishment deters most multinational companies from touching Iran with a 10-foot pole. Even humanitarian goods become tricky when banks refuse to handle Iranian transactions. The net effect of decades of sanctions has been the gradual strangulation of Iran's economy. Think of sanctions as a chokehold, not always immediately fatal, but persistently squeezing. Iran's isolation resembles other sanctioned states like Venezuela or North Korea, but on a larger scale and for a longer time. And as long as the political standoff with the West continues, over nuclear issues, regional policies, etc., this economic chokehold isn't loosening much. Sanctions have not totally crippled Iran. The country limps along, but they have certainly ensured it never runs at full speed. In essence, sanctions are a constant headwind, making every other economic problem that much worse. Ironically, the very asset that should be Iran's economic blessing, its abundant oil and gas, has often been more of a curse. Iran sits atop the world's second-largest natural gas reserves and fourth-largest proven oil reserves. For decades, oil has been the cash cow feeding government budgets. But this heavy oil dependency left Iran dangerously exposed to what economists call the resource curse. When a country relies so heavily on exporting commodities, it can suffer from volatility and neglect of other sectors. Iran's experience is a textbook case. During oil boom times, money flowed freely, and Iran's leaders often spent lavishly or subsidized everything from fuel to food. But high oil revenue can breed complacency. Why diversify the economy or reform taxes when petrodollars rain down? It also can breed corruption. Vast oil income controlled by a few hands invites mismanagement and graft. Comparative examples abound. Venezuela is one striking parallel, an oil-rich nation where a collapse in oil prices and poor governance led to economic ruin. Iran hasn't collapsed like Venezuela, but it shows similar symptoms: a government budget at the mercy of oil markets and a neglect of industries outside the oil sector. In fact, even compared to its Persian Gulf neighbors, Iran underperforms. Smaller states like the UAE or Qatar also bank on oil and gas, but they invested in diversification, tourism, airlines, finance, and built sovereign wealth funds as rainy day savings. Iran did create a national development fund to save some oil revenues in good years, but pressing needs and sanctions mean those savings get tapped quickly. Oil thus became a double-edged sword, funding short-term growth while sowing long-term instability. Few things illustrate Iran's economic misery better than the tale of its currency, the Iranian rial. Over the past decade, the rial's value has collapsed catastrophically, unleashing punishing inflation on ordinary people. Just a few years ago, $1 cost about 40,000 rials. Today, that same dollar fetches well over 500,000 rials on the open market. In other words, the currency has lost more than 90% of its value against the dollar in less than a decade. This kind of freefall means savings are wiped out and prices for anything imported have exploded. Iranians have watched the price tags in shops climb week by week on basic goods: meat, cooking oil, rice, medicine. Annual consumer inflation officially hit about 50% in 2023, and some unofficial estimates put actual inflation closer to double that. Even at only 50%, that level of inflation means the average basket of goods costs 1.5 times what it did a year prior. Many items have risen far more. For example, after certain subsidies were cut, Bread prices in some areas reportedly doubled or tripled within months. For families, this is devastating. Wages rarely keep pace with inflation, so purchasing power erodes fast. Why did the real crash so hard? One major culprit is sanctions, which strangled Iran's access to foreign exchange. When Iran can't freely sell oil or access global banking, dollars become scarce. A scarce dollar means each dollar is worth more reals. Iran's government also printed enormous sums of money to finance deficits when it couldn't borrow abroad. Pumping all that liquidity into the economy devalued the currency. Combine that with a loss of public confidence, people rushing to convert rials to dollars or gold at any hint of trouble, and you have a recipe for hyperinflationary pressure. The government tried band-aids. For years it maintained an official exchange rate, like 42,000 reals per USD for essential imports, pretending the currency was stable, even as the black market rate soared far higher. This led to corruption. Well-connected importers got cheap dollars, and still didn't stop the bleeding. By 2022, they scrapped the unrealistic rate, and the rial was officially allowed to slide closer to the real value. A new, subsidized rate of 285,000 rials per USD was set, still far short of the street rate above 500,000. For an average Iranian, these currency shenanigans translate directly to hardship. Imagine your life savings, meant to buy a house or fund retirement, suddenly worth a tenth of what they used to be. You might be wondering, can't the central bank simply halt the inflation? In theory, yes, by sharply raising interest rates, cutting money supply, and restoring confidence. But Iran's central bank has limited tools and independence. Much of the inflation is structural. As long as the government runs large deficits and sanctions restrict foreign income, there is immense pressure to devalue the rial. In short, Iran is caught in a vicious cycle. A weak currency makes imports costly, which fuels inflation. High inflation then drives people to ditch rials for dollars, weakening the currency further. It's a downward spiral that has pushed many into poverty. In Tehran, it's not uncommon to see people speculating in currency or gold on the side. Anything to avoid holding rials that lose value daily. The rial's collapse is both a symptom and a cause of Iran's broader economic malaise, wiping out trust in the economy. Stroll through any Iranian city and you'll encounter a demographic reality. Iran is a nation of young people. Roughly 2/3 of Iranians are under 35. This should be an energetic workforce powering the economy. Instead, many of these young people are either unemployed or stuck in low-quality jobs, and a growing number are looking to emigrate. Officially, Iran's unemployment rate has recently been recorded around 8 to 9%, a record low. But that headline number is very misleading. The only reason unemployment appears single-digit is because millions of working-age Iranians have dropped out of the labor force entirely, discouraged by the lack of opportunities. The labor force participation rate is only about 41%, meaning well under half of adults are even trying to work or find work. When so many people give up job hunting in despair, the unemployment rate paradoxically falls. It's a statistical quirk, masking a social tragedy. A closer look shows who is most affected. Youth unemployment is over 20%, and that's an average. In some provinces or among young women, it's far higher. College graduates, ironically, have high jobless rates as well, over 15%, as the economy fails to absorb the steady stream of educated talent. Women in particular face a tough time finding jobs. Female unemployment hovers around 15%, roughly double the male rate, and women's labor participation is extremely low by global standards. Only about 14% of Iranian women work or seek work due to cultural norms and scarce jobs. These statistics translate to millions of frustrated youth. Picture a young university graduate in Tehran or Isfahan. She's educated, connected to the world via the internet, brimming with potential. Yet she's sitting at home unemployed, or driving a snap taxi to make ends meet because there are no jobs in her field. This brain waste is demoralizing and economically crippling. If you're thinking Iran can't be the only country with a youth unemployment problem, you're right. Much of the Middle East struggles with this. But Iran's case is particularly severe given its education levels. Nearly every family has invested in higher education for their kids. Iran's universities graduate large numbers of engineers, doctors, and scientists every year, raising expectations that aren't being met. You might be wondering why all these educated youth can't find jobs. The reasons are multifold. An economy starved of investment, due to sanctions and uncertainty, isn't creating new businesses. State-run industries are bloated and often hire based on connections, not merit. And innovation is stymied by censorship and lack of global integration. Many young Iranians simply see no future at home. A telling indicator: in a recent poll, almost half of Iranians aged 18 to 29 said they would leave the country permanently if they could. This is a huge warning sign, a society losing faith in its own future. Unemployment isn't just an economic number, it's fueling a social crisis, contributing to rising crime, depression, delayed marriages and childbearing, and of course the brain drain as the best and brightest look abroad. Behind Iran's inflation and job woes lies a government that is perpetually grappling with fiscal imbalances, basically budget problems. Iran's government spends a lot on subsidies, salaries, military, etc., but its income is volatile and often insufficient. Sanctions slashed oil revenues, and Iran's tax system is underdeveloped. Much of the economy is informal or controlled by semi-governmental bodies that don't pay taxes. The result has been years of budget deficits. To cover the gap, the state has often resorted to printing money or borrowing from the central bank, which, as we discussed, feeds directly into inflation. It's a vicious circle. Deficits cause money printing, which causes inflation, which then forces the government to spend more on things like welfare and public wages to keep up with prices, which then widens the deficit further. On paper, Iran's public debt, around 35 to 40% of GDP in recent years, isn't extreme by international standards. But Iran can't easily borrow from abroad, thanks to sanctions, or attract foreign investment through bonds. So its financing options are basically squeeze the domestic banks, which hurts credit to businesses, dip into the National Development Fund, its rainy day oil savings, or print more reals. It has done a bit of all three. One major strain on the budget is subsidies and populist economic policies. Iranians have long enjoyed cheap fuel, bread, electricity, and water due to government subsidies. This is politically popular, but fiscally draining. By 2019, the subsidy bill became unsustainable, and the government attempted a bold reform. Overnight, it hiked gasoline prices by as much as 50% and imposed rationing, intending to reduce subsidy costs and raise revenue. The result? Immediate and fierce nationwide protests in November 2019. The anger was not only about fuel prices, it tapped into broader frustration that people were paying for the regime's mistakes. The state suppressed those protests. Economically, the episode showed the bind Iran is in. When it tries to fix its finances, the public, already living on the edge, explodes in anger. So meaningful reforms, like cutting subsidies or shrinking the bloated public sector, are politically perilous. The government often backtracks or implements half measures, and the structural imbalances remain. Add to this a heavy dose of corruption and mismanagement. Decades of revolution and war placed a premium on loyalty over technocratic competence in Iran's governance. Large portions of the economy are controlled by opaque institutions, more on that in a moment, which don't answer to the finance ministry. Tax evasion is rampant. Iran's own officials admit that the informal and black market economy might be as large as 1/3 of the official economy meaning billions in potential taxes go uncollected. It's estimated that tax evasion and avoidance in Iran equals the entire annual budget of many provinces. This is money that could have been schools, hospitals, or infrastructure, but instead lines pockets or just slips through cracks. You might ask, why not crack down on tax cheats and waste? Well, many tax cheats are ironically powerful entities, including those quasi-state foundations and military businesses, or individuals with connections. The political will to make them pay up is lacking. When budgets are tight, often the first thing to get cut is development spending, long-term investments, rather than, say, elite privileges. This short-termism further harms growth. To truly understand why Iran can't seem to right its economic ship, one must look at its political power structure. Iran's governance is complicated. It's a unique hybrid of theocratic authoritarian rule layered on some republican institutions, but in practice, the unelected bodies hold the real power. Supreme Leader Ayatollah Ali Khamenei and the institutions under his control, like the Guardian Council, the Judiciary, the Revolutionary Guard Corps, and various foundations, can overrule and override the elected president or parliament whenever it suits them. This entrenched system creates institutional dysfunction that weighs heavily on the economy. Policies often prioritize regime survival and ideology over economic common sense. For example, hardline elements might block a sensible reform simply because it threatens their patronage network, or pursue costly ventures like a nuclear program or regional interventions, despite economic costs, because strategic political goals win out. Economically, Iran resembles a monopolistic religious commercial system, as some analysts have put it. Essentially, a capitalist economy captured by a clerical military elite. Roughly 80% of Iran's economic activity is controlled by the state or semi-state entities. This includes not just traditional state-owned enterprises, but huge religious foundations known as bonyads and conglomerates run by the Revolutionary Guard, IRGC. These organizations operate massive businesses, from oil and construction to telecommunication and agriculture, often exempt from taxes, shielded from scrutiny, and favored in government contracts. They answer only to the supreme leader. Imagine an economy where the biggest players don't have to play by the same rules as everyone else. That's Iran. It's no surprise that genuine private entrepreneurs struggle to compete or grow in such an environment. Many end up co-opted, buying favors, or simply decide not to invest at all. Foreign investors certainly take pause. Who wants to invest in a place where an unaccountable military-industrial complex can suddenly change the rules or snatch opportunities? The political structure also means policy whiplash and unpredictability. One president might lean moderate and try to open up, like President Rouhani did with the 2015 nuclear deal. But the next, like hardliner President Raisi, reverses course on cooperation and fills the administration with ideological loyalists who lack economic expertise. In Iran, technocrats are often viewed with suspicion by hardliners, leading to purges of capable officials. The result is a talent drain within the government itself. Ministries that once had experienced managers are now led by less qualified loyalists. When ideology trumps merit in governance, you get mismanagement. A senior official might make decisions based on revolutionary slogans rather than sound economics. For example, instead of privatizing efficiently, Iran engaged in what critics call pseudo-privatization, selling state assets to semi-state entities, often controlled by the Revolutionary Guard or pension funds, rather than true private owners, thus not actually increasing competition or efficiency. Why does the political setup matter so much for the economy? Because an economy needs clear rules, rule of law, and accountability to thrive. In Iran's case, powerful interests can bend rules at will. If you're a business owner, The unpredictability is terrifying. Today, you might be doing well, but tomorrow some revolutionary Guard-affiliated firm might take over your market, or a new directive might ban your import line because it's deemed non-essential or Western. There's also the issue of international relations. Iran's political ideology often puts it at odds with major economic powers, which circles back to sanctions and isolation. In short, Iran's political system creates an environment of deep uncertainty and inefficiency. Investors, domestic or foreign, hate uncertainty. Capital flees to safer havens. Over time, this has led to chronic underinvestment in Iran's economy. Factories get outdated, oil fields need upgrades, but foreign oil companies left long ago. Infrastructure like power plants and railways fall behind regional peers. All of this stems from a governance system that has not prioritized transparent, pragmatic economic management. Unless Iran undertakes major political institutional reforms, which the current regime is loath to do, this dysfunction will continue to act like sand in the gears of the economy.